Intel stock is suddenly sending shockwaves through the financial markets right now, and what we are witnessing may be one of the most important trading moments of this week. After a powerful and aggressive rally, Intel has pushed sharply higher in a very short period of time, catching both retail traders and institutional investors completely off guard on Wall Street. Traders are now watching this move very closely because rapid rallies like this often signal that something much bigger is developing beneath the surface. Technically speaking, Intel is now classified as one of the most overbought stocks in the market, which means momentum has stretched far beyond normal levels. And whenever a stock reaches this kind of extreme condition, the market usually enters a phase of uncertainty, where both bulls and bears begin to fight for control. What makes this even more interesting is the sudden spike in attention as more investors begin to focus on Intel's movement, driven by fear of missing out. Price action like this is often driven by emotional trading, where momentum accelerates faster than fundamentals can fully justify. But at the same time, early investors may begin taking profits, locking in gains after such a strong rally, which can quickly shift market direction. Analysts are now divided, with some believing this could be the beginning of a long-term recovery, while others warn that the move may be running out of steam. If bullish momentum continues, Intel could extend its rally even further, potentially breaking key resistance levels and attracting new buyers. However, if selling pressure increases, we could see a sharp reversal, where the stock pulls back as traders rush to secure profits. This is where market psychology becomes critical, because emotions like greed and fear often drive price action more than logic in the short term. As prices rise, more traders begin entering late, driven by FOMO. The fear of missing out on what looks like a continuing breakout, but behind the scenes, institutional investors often move differently, quietly positioning themselves before the broader public reacts. Retail traders, on the other hand, often react emotionally to fast price changes, entering and exiting positions based on short-term volatility. And one of the key signals to watch right now is trading volume, because sudden spikes often confirm strong interest or potential reversal pressure. Intel is now approaching a critical resistance level, a point where the stock has previously struggled to move higher. If this level is broken with strong momentum, it could trigger a fresh wave of buying pressure and extend the rally further. But if the price is rejected at this level, it could signal exhaustion, leading to a short-term pullback or correction. Meanwhile, financial headlines are rapidly spreading, increasing attention and adding even more volatility to the stock. This is how the emotional cycle of the market works, from excitement to greed to fear and back again. A correction is not necessarily a bad thing, because it often resets the market and creates healthier long-term price structure. In many cases, pullbacks like this can actually create better entry opportunities for long-term investors waiting on the sidelines. Institutional confidence, however, will play a major role in determining whether this rally continues or slows down. If selling begins to accelerate, emotional panic can spread quickly, leading to sharper downward movement in a short period of time. At the center of all this is Intel itself, a company now facing one of its most important short-term technical moments. So the big question remains, is Intel preparing for another breakout, or is a correction just around the corner? Drop your prediction in the comments below, bullish or bearish.